Hello guys, and welcome back to the channel for another awesome video. And today I want to talk to you about why the Ukraine-Russia conflict made me want to go all in on Palantir. So a little bit about me. I'm a Swedish real estate developer who is currently developing hundreds of apartments in southern Sweden. And I decided to diversify into the stock market and go very seriously and share this journey with you guys. I mostly have been a technical trader, and then meaning I've done a lot of courses on how to do technical analysis, have a few years of experience with technical trading on the stock market. But I decided that I want to do research for myself on what strategy, whether it's fundamental, technical, or a combination of both, is the best to have for your portfolio. And I want to share this with you guys. So I decided to diversify a bit away from technical trading, and half my portfolio is going to go into long-term investment. And currently I have about 100,000 on the stock market. So I'm planning on putting 50,000 into a longer-term investment, and I want to scale up this portfolio. And I am very much thinking, because of this Russia-Ukraine crisis, to put all of this money into Palantir. And I was actually between a few stocks. I was looking at Tesla, I was looking at Teladoc, I was looking at Zoom, a few others. I'm still going to do more research, but I wanted to share my thought process with you and why I think that this is an awesome bet. So first of all, let's look at the chart of Palantir. So it went public here. This was about a year and a half ago. Then the stock price was at one time $45, and it is currently 11. It's almost 80% down. So if we just look from a risk-reward perspective, many people are suggesting that, and also I think that this could be a $300 to $500 stock. So if I look at what is my risk, if I buy it at $11, it can go to $0 or it can go to $300. It's a fantastic risk-reward ratio. Very hard to find such a risk-reward ratio on the stock market. Second of all, I think that this company is starting to be... I actually missed investing in Tesla. So I saw in 2013, I actually didn't have money, and I was stupid. But long story short, I saw who Elon Musk was. I was mass watching videos about Elon Musk, and I started to understand how great this company is. I just didn't understand that there can exist companies that come once every 10 years that can just grow and grow and grow, and they become trillion-dollar companies, and you feel that they're overvalued and they're expensive. But if you look at their future, they're going to 100x from the point when they are. So it actually doesn't matter what price you're paying for them. And there was a couple of telltale signs on Tesla that it could be such a company. And one of them was, like how many YouTube channels were following, and, like how much attention Elon Musk was getting. And, there was YouTube channels about the Tesla stock. There was YouTube channels about the Tesla product. And, I'm starting to see a little bit of this with Palantir. And this is a very good sign for me that there is diehard people that have entire YouTube channels dedicated to, I don't want to say pumping the stock, but basically they're pumping the stock. It's a bad word, but what they are doing is they're, creating awareness about Palantir, and it's actually, pumping the stock. I don't know. I don't have a better word for it, but I don't mean it in a bad way. So now let's look at a little bit about the fundamentals. So the company is not profitable yet, but this is sort of a misunderstood thing. So if you look at their cash flow statement, you can see that they were burning cash. And then this last quarter, no, it's actually last year, they had 321 million free cash flow while paying back 200 million of debts. And you can see that they had 2.366 billion with a B on the bank account. So that is fantastic. So I believe that you have a situation here that they are a company that was unprofitable. It has turned profitable, but Wall Street missed that it has turned into profitable because they are giving out a lot of stock-based compensation, which is not a cash item for this company, meaning that per the rules of bookkeeping, when you pay your employees in stock, you can deduct it from your taxes. So that means that in your bookkeeping, you put it as an expense. And I believe that they did 400 million in stock-based compensation. And if you look at how much minus they were, and you take out the stock-based compensation, which again is not a cash item. So let's look at this company's income statement, and you see that they were $469 million minus, which is a way less minus than this $1 billion the year before. However, if you would take away the stock-based compensation from this, because I believe it's this situation that Wall Street misses, that this company actually turned profitable. And this is when you have insanely good opportunities, when Wall Street misses something in a stock. And, you know, here you have the stock-based compensation that is it's a non-cash item, but you put it in the bookkeeping because the IRS allows you to deduct this from your taxes, right? So if you would take that away, this company would be profitable, basically. Then you look at their balance sheet. So we established that they have a positive free cash flow. They are basically a profitable company already. Then we have already seen that they had 2.2 billion in cash on their bank account. Okay, but what's the loans that they have? Total non-current liabilities, $300 million. So that means that they could, in a second, pay back all their debts, no problem. So that means that they're very inflation-proof. They have a very strong cash position. They don't need to raise capital anytime soon. And now let's look at what analysts are thinking about this stock, because, okay, that's one thing that they are like this, but obviously, you know, this stock needs to grow for us to become interesting, right? So if we look at, okay, is in the next 10 years, is the AI and, you know, big data, which is considered the next oil, going to improve or not improve? Is there going to be more of that or not, you know? And the question is how much? So if you look at that, the analysts, they're expecting like 5 years, 43% per annum growth of a company. I don't know of any other company on the stock market currently that has this type of growth. Just these fundamentals would make me very bullish on this company, right? But the fact that if you look at where we are on the stock market, that you have basically peak fear, Russia just attacked Ukraine, the market is in correction territory. And, you know, even, I mean, I don't know if it's a plus point or not, but even Cathy Wood was in the news selling this stock. Like, you know, if you're a long-term investor, like, yes, if you're trading short-term, you know, trend is your friend. And, you know, I know that this stock is in a huge downtrend currently. But if you're a long-term investor, this is when you would want to buy this stock, when the market wants nothing to do with it. And currently the market very heavily punished this stock because they feel it's unprofitable. They feel it's a high-risk play. You know, if you want to grab something that you get at peak fear, then this is your stock. And a little bit, I also wanted to tell you that I was thinking about 3 companies more to you know, maybe diversify the portfolio a little bit, and I came to the fact diversification. Just go with this one. In closing, want to tell you about this. So basically, Zoom is it's very similar, very, very punished by the market. They are trading at pre-pandemic levels, while the company has made significant improvements. They are, if you look at their financials, they're basically a money printer of a company. So all this is really good. What worries me with Zoom is I don't know how much growth there is left into the stock, because I feel like, you know, like if you didn't sign up for Zoom during the pandemic, then why? I mean, I see that you wouldn't cancel it now, but I don't see why you would sign up now if you didn't sign up in the pandemic. Just wanted to show here the profitability of the company, if my computer would want to cooperate. There. I mean, look at this. Look at how much they have grown between 2020 and 2020. I mean, I've never seen this. So basically, I'm really worried about the growth of this company. They also have a very strong balance sheet. I mean, very profitable. But here, what worries me is the growth. Okay, so the next company that I was looking at was Tesla. I mean, Tesla needs no introduction. So basically, this is a company that hasn't been punished that much, but it's also not the same high risk play as the other companies. It's cash flow positive, many plus points on this. But what worries me on this stock is actually how big Tesla has become. Because think about it, what does it take to turn Palantir around? All it takes, because it's a few tens of billions of market cap. Tesla is almost $1 trillion in market cap. So basically, I feel that Tesla very much represents the market sentiment, and you need a lot of buyers in the whole market to turn back to bullish to buy this stock. I'm still thinking about maybe investing, because I mean, it's very like, does it have the same growth potential as Palantir? No. Is it very easy money in the next 5 years? Yes. I mean, I don't know what would make this company not grow. I don't know what situation. They have 20 billion cash in their bank. Fantastic expansion. They have gotten Elon Musk. I mean, what more do you need? But I feel that it's like, if we're going to go into a bear market for the next, I don't know, 1 to 2 years, there is a risk. Okay. Hey, meet Kevin sold everything. You know, you never know what happened. But I heard he's buying back now. But anyways, my worry with this one is that I feel it takes so much, because it has become such a beast. It takes so much to turn this one around. And then I really like T-Doc. For many reasons. I super much believe in in their business model, and they are the future of, you know, like how you will interact with your doctor. Their price has become insanely low. I mean, it's like, think about how much progress this company has made in the last few years, and it was already at this level in 2018 July. It's nuts. But what scares me with this company is kind of the low stock price, because if you look into the balance sheet of this company, I'm not gonna, you just have to take my word for it. So I looked into the balance sheet of this company, and they have 1.5 billion in debts and about 700 million in cash in the bank, and they are burning cash like crazy. So it's very likely that they will need to raise capital or issue debt. And when your stock price sucks like the way this one does, then you will dilute the shareholders very much. So I feel that, are they going to succeed? Probably, basically 99% sure. But is it going to be a bumpy ride? Yes. And so if I look at, okay, which one was the stock where I feel that, okay, it's very easy, small changes are needed to make it skyrocket. The risk reward ratio is insane. The balance sheet is pristine, as good as it can get. The growth is as good as it can get. You know, it's aligning with multi-years or, you know, decades of trends that I foresee coming in the future. It is Palantir. So I feel this is why I think that this Russian-Ukraine, you know, max fear market is the best time to invest in this, and I'm very strongly considering going all in. And just wanted to share this info with you. So if you think that this was useful to you, then please make sure you hit the like button and subscribe. And I will see you in my next video. Bye bye.